By 10 in the morning on the American East Coast, London has already been working for 5 hours. The day's direction looks decided, the morning move is on the chart, and it would be very easy to believe the interesting part is over. Then, at 1300 UTC, the second largest trading center on Earth sits down, with the currency that's on almost 9 out of every 10 trades in its pocket. And about half the time, it looks at London's morning and simply disagrees. That center is New York, and this is the last stop on our tour of the trading day. By the end of this video, you'll know when this session actually runs and why its clock moves twice a year. What it means that the dollar is on one side of nearly 90% of everything. Why the Canadian dollar only really comes home in these hours. What the American data window does to the first part of the session. Why the overlap with London is the best window on the entire clock. And why the hours right after New York leaves are the worst. The best hours and the worst hours of the whole day in the same video. So, if this kind of content helps you, take a second to like the video, subscribe, and turn on notifications so the next lessons reach you the moment they go live. And feel free to share in the comments which topics you would like us to explore in future videos. And if you want to support the channel on a deeper level, consider becoming a member to unlock exclusive content and help keep these lessons coming. You'll also find links to our trusted partners in the description below. Using them costs you nothing, and it directly helps the channel keep producing free educational content like this. First, the window. New York runs from roughly 1300 to 2200 UTC, 8 in the morning to 5 in the afternoon on the American East Coast. And like London, America moves its clocks in March and in November. So through the American summer, the whole session lands an hour earlier in UTC. Same advice as always. Learn your hours in UTC and check the shift twice a year. Between the European change and the American one, there are even a couple of odd weeks where the two sessions slide against each other. Now the size. The United States handles somewhere around 19% of global Forex turnover, a giant, second only to the United Kingdom's 38%. But that number undersells what actually walks in the door, because the currency this session brings home is on one side of roughly 88% of all trades on the planet. London is where the world books its business. New York is where the world's currency lives. When American banks, funds, and corporates sit down, they're not joining someone else's market. They're arriving at the center of their own. And notice what this open is not. London stepped out of 7 hours of silence, which is why it hit the chart like a switch being flipped. New York opens into a market that's already running at full speed. So there's no box quietly waiting to be broken here. Instead, the market that was already loud gets louder. Remember the line from last time. London's final 4 hours are its loudest, and this open is exactly the reason why. But there is still a detonator in the first part of this session, and it's not the open itself. It's the calendar. The United States publishes its most important numbers at 8:30 in the morning New York time, right around the session open. The monthly jobs report, inflation, growth. And here's why that matters more than any other country's data. When a British number surprises, the pound moves. When an American number surprises, the dollar moves. And the dollar is on one side of nearly everything. One line on a screen in Washington can reprice every major pair on your platform inside a minute. The Federal Reserve lands in this session too, 8 times a year, at 2 in the afternoon New York time. And those afternoons are the most watched minutes in all of finance. We'll give the economic calendar its own full video later in this course. For now, hold on to this. The London morning had scheduled events in it, but the New York morning is built around them. Now the currency that's been waiting all course for this moment. Remember the commodity dollars video? We said the Canadian dollar is the American session's local. This is the only window where both sides of US dollar to Canadian dollar are properly awake, and it gets better. Canada publishes its own numbers at 8:30 in the morning too, the same minute as the United States. Twice a month or so, both sides of that pair get news at literally the same second, and US dollar to Canadian dollar does its entire week's living in about an hour. Add the rest of the Canadian story. Oil inventories landing on Wednesday mornings, the Bank of Canada making its announcements in these hours, and the conclusion writes itself. If you ever plan to touch US dollar to Canadian dollar, this session isn't the best window for it. It's the only one. Now the headline, the overlap. From 1300 to 1700 UTC, London and New York are working the same 4 hours, and we've been pointing at this window since the session video. This is the deepest, most liquid, most crowded stretch of the entire trading day. Both homes of euro to US dollar are awake. Both homes of pound sterling to US dollar are awake. Gold has London's vaults and New York's futures running side by side. Spreads across the majors are the tightest they will be all day. And this is when the day's story gets finished. London's first 2 hours decide the day's direction surprisingly often. We saw that last time. But the overlap is where that direction either gets funded or gets vetoed. When the American money agrees with the European morning, you get the clean trend days that end up in everyone's screenshots. And when it disagrees, you get the other famous pattern of this session. The morning move stalls at the open, or right on an 8:30 number, and spends the afternoon traveling backwards. That's the New York version of the trap we talked about in London. There, the fake was the first break of the overnight box. Here, the fake is assuming the morning's direction is a done deal just because it's been running for 5 hours. Half the job of this session on any given day is deciding whether to pay London's morning off or to refund it. Expect both, and let the chart tell you which one you're in. How you actually confirm that is technical analysis course business, and the smart money material digs into why those morning highs and lows attract price in the first place. Then 1700 UTC arrives, and you can see it on the chart almost as clearly as the London Open. Europe goes home. Half the market stands up and leaves, and New York spends its last 5 hours working alone. Nothing dramatic happens. That's exactly the point. Ranges shrink, moves stall, and the afternoon mostly manages whatever the overlap decided. If the morning was the argument, the American afternoon is the paperwork. To be fair, the afternoon isn't dead, it's just local. The dollar and the Canadian dollar still have their whole home team at the desk. The oil market settles in these hours. And on Fed days, the biggest move of the week happens here. But on a normal day, treat it the way we treated Asia. Smaller expectations, smaller targets, more patience. Tokyo-sized ambitions, not London-sized ones. And then comes the stretch that deserves its own warning label. At 2200 UTC, 5 in the afternoon in New York, this session ends, and for the next hour or two the market is at its absolute thinnest. New York has left, and Sydney and Tokyo haven't properly arrived. This is also the moment the trading day officially rolls over, when the daily interest we talked about back in the swaps discussion gets settled, and for a few minutes even euro to US dollar, the cheapest, deepest pair on earth, can show you a spread you'd normally associate with some exotic cross. So here's the simplest rule in this entire chapter: leave that window alone. Roughly 21 to 2300 UTC, the market is a hallway with the lights half off. The market runs 24 hours. We spent a whole video on that. But 24 hours open has never meant 24 hours worth trading. This is the emptiest corner of the clock, and nothing you do in it will be cheap. After that, the wheel simply turns. Sydney picks it up, Tokyo sits down, the polite ranging session from 2 videos ago starts building tomorrow's box, and the whole cycle we've spent 4 videos walking through begins again. You now know the entire map of the trading day, end to end. So who is this session actually for? If you're watching from the Americas, this is your home game. Here in Brazil, at UTC -3, the open lands at 10 in the morning and the overlap runs until 2 in the afternoon. The most livable prime-time window this market offers anyone on this side of the planet. For Europe, it's the afternoon and evening shift. And if you're in Asia, this one lands in the middle of your night, and honestly, it's your turn to sleep. That's what the other 3 videos were for. The shopping list, then. During the overlap, everything major is at its best. Euro to US dollar, pound sterling to US dollar to Japanese yen, gold, and US dollar to Canadian dollar all have deep, cheap, crowded markets. After 1700 UTC, narrow it down. The dollar pairs, US dollar to Canadian dollar above all, still have a home side awake, while the European pairs wind down. And from 2100, the list is empty on purpose. There is no pair on the board worth paying rollover hour spreads for. One honest caveat before the homework, and it's the same one as always. Busy is still doesn't mean best for you. An 830 number can produce the fastest loss of your month just as easily as the fastest win, and volatility only pays the prepared. How much you should even have at risk in a window like that is a risk and mindset question, and that belongs to our psychology course. Homework for the week, and it completes the routine we've been building. You already marked the Asian box, and you already know whether London broke the high or the low. Now add the closing line. At 1700 UTC, when London goes home, write down whether the overlap extended London's move or reversed it. 3 lines a day, 5 days. By Friday, you'll have watched the trading day get born, get decided, and get settled, and you'll know which of those 3 acts actually fits your life. So, what happens when New York takes over? The world's reserve currency comes home. The American data window starts throwing its 830 punches. The Canadian dollar finally gets both feet on the floor, and for 4 hours, the 2 biggest sessions on Earth run side by side in the deepest market of the day. Then London leaves. The afternoon quietly files the paperwork, and the day dies at the rollover. Asia thinks, London decides, and New York settles the bill. And in the next video, we put dates and times on everything you've just learned. The economic calendar, the jobs report that owns 1 Friday a month, the inflation number that can undo a week of drift in 1 minute, the central bank meetings we've been name-dropping since Chapter 1, which events actually matter, which ones are noise, and how to read the calendar like a trader instead of an economist. I'll see you there, trader. So, trader, if this video brought you more clarity, like it, subscribe, and turn on notifications so the next lessons reach you. And tell me in the comments what you want me to cover next. And if you want to go deeper, you can become a member of the ComLucro trader community right here on YouTube. It unlocks exclusive content, early access, and extra tools for your development, while directly supporting the channel. You'll also find our trusted partners linked in the description. Using those links costs you nothing and helps us keep producing this kind of educational content. And remember, the mission of the ComLucro channel is simple. We help traders build clarity, confidence, and structure, so every decision is made with discipline and intention. Here you'll find complete courses built as a true trading masterclass. Liquidity, market structure, higher time frame analysis, and supply and demand. Always focused on reading price and executing with a professional mindset. We also cover trading psychology, risk management, and long-term consistency. Because trading isn't just about charts, it's about mindset, discipline, and execution over time. Our main courses include smart money concepts, ICT, technical analysis, trading psychology, and Wyckoff. Alongside that, we share insights from respected traders whose work helps you understand how markets really behave. Thanks for watching, and I'll see you in the next video.